author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the September 4th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a fantastic, wonderful Wednesday. I know I did. Let's make sure that you and I, we do all that we can do to have one heck of a terrific Thursday. I know I'll do all that I can for the next couple hours by sharing with you extraordinary tools that help us identify where price is headed to. Many of those tools, they help us identify where price is headed to in advance out there. So we got our toolkit out. That includes our A to B equals CD pattern. That's our lightning bolt. We'll take a look at Fibonacci expansions and retracements because the combination of those two create the Gartley and butterfly buy and sell patterns out there. Of course, we'll utilize Japanese candlesticks because the bulls and bears are always forming messages for you and I. We just have to go read them. It's not like reading the tea leaves. It's just reading the charts out there. So we'll do that. We'll take a look at TAS market profiles, Chapman wave patterns. We'll take a look at the Rhodes momentum trading signals. We'll use that entire toolkit to help you identify where prices are headed to. Now, the cool thing is that this is an interactive show. That means we'd love to hear from you, and you can reach out to us by calling us at 877-927-6648. Internationally, our phone number is, I don't remember it now off the top of my head, but that's okay. 727-445-1044. I knew I had it written down somewhere. So you can give us a call. I'd love to hear from you. And let's just remember this, folks. We are not and should not be prisoners of our past. Just simply instead being pioneers of our future. That's all that we need to be. In fact, somebody, as our man Z, I think, posted something in the Tiger's Den about all the drugs, all the people. I didn't really get a chance to see what the percentage was. Folks that are on medication for depression out there. And, folks, that is, if you're going to focus on your past, that'll get you there. Instead, create this beautiful future, create some nice rainbows out there, some sun. And I just say thank you for joining me. So in any event, let's get started here. It is Terrific Thursday. I'm Steve Rhodes. This is TFNN, and welcome to the show. We got lots to take a look at out here, no question about it. How about the futures market right now? Somewhat muted. You got the Dow futures up about 30 points, trading at 17,101. S&P's up about 6, trading at 2,004. NASDAQ up 11. Russell 2000 up 5. But how about the king? Not Arnie Palmer out there. The king. King dollar. King dollar up 512 ticks right now, up 51 cents, trading out at 83.40. Now, the interesting thing here, the cool thing here, if we take a look at commodities, and we'll do that here during the show, gold is off only $1. Something to think about. Because of the correlation, directional correlation there is between gold and silver. Silver's up 3 pennies right now. So this move that we've seen here inside the U.S. dollar index not impacting the metals. I wonder if metals are trying to form a bottom out there. Now, not the same in the case of light sweet crude. It's trading out at 94.53. It's off $1. But, of course, light sweet crude is kind of like the weapon of mass destruction for Putin out there, right? So I think with regard to crude, we need to kind of take a look at that maybe from a different perspective out here. We take a quick peek across the globe. Let's go see what's going on over in Europe, in Germany right now. DAX is up 46 points. The FTSE is up 9 in Asia last night. Just a mixed bag. I think maybe they weren't too sure about what was going on with Uncle Mario Draghi, Super Mario Draghi. Nikkei finished down 52 points, 1/3%. Hang Seng was flat, off 20 points. The Shanghai was up 19, about 0.8% out there. All right, so let's begin here by taking a look at the currency market. So let's jump in. Let's take a look at a number of different tools in order to analyze this. Let's first start off. Let's go back to my daily chart out here because I had originally painted a picture. Might have been for Lou and Nash, or maybe it was just ourselves as we were taking a look at it. What I had drawn in here was the fact that the euro ought to head down to about the 1.3019 level. Now we're trading out right now 1.3017. How did Stevie do that? Well, it's really just taking a look at the retracements, the 0.786 reach. They're really a combination of two factors. You see the light blue pattern that I've drawn that is drawn in. If you're watching this on TigerTV, this was drawn in days ago. Maybe it was even last week out there that this was the likely pattern that would unfold. Now, is the euro going to stop here? Look, hitting it so far today with this wide-ranging bar, the answer is no, or at least what I can say is that markets don't end on wide-ranging bars. But this trading session is not over, so we've got a lot of time left in the trading session here, and to analyze this chart, right now, we're making a decision based on this candle right here and taking the trade right here, stepping in right now to go along the euro. That's not anything that I would recommend. You'd like to see it be hit with these small-bodied candles that took place out here, on September 1st, 2nd, 3rd, 4th out there. However, price is at a fairly significant level that may act as support. If this area here fails, what we should see inside of the euro-US dollar is 100% move. That will take the euro all the way down to the lows back here on July the 9th out at the 1.2754. So we've got to go from here. Now, can it move lower? Absolutely. The way that this has moved into the D point, the D point being the 1 to 1.272 A to B equals CD to the downside. The way that it's moved in to the 0.786 area says, hey, you've got to have caution, Will Robinson. Now, let's go see what would Will Robinson look at next. What he would look at next, he would look at the intraday chart. So we're going to come take a look at a 30-minute chart out here, and you're going to see a couple different currency pairs. We'll take a look at each of these. But I'm going to first put the euro-US dollar up on my screen out here, and as I do that, whoops, grabbed the wrong corner. As we take a look at this here on the 30-minute chart, you did have a hammer candle that formed right here. This is the candle signal that took place at 8:30 in the morning. I'm going to go ahead and bust it out a bit here. And so that low is what is being tested here right now. I'm going to draw a line across my screen so we know where the Super Mario Bulls are hanging out. And they're hanging, oops, sorry about that. They're hanging out right here at that low, 1.30127 out there. That area is being tested. If this area on a 30-minute chart gets rejected and we see some other kind of bullish signal out here, then the 30-minute chart would be correlating to that daily pattern that we saw out there, that 0.786 Gartley buy, and that would be your first leading indicator signal of a potential reversal that would be out there. And that's taking a look at that intraday chart for the euro. As long as we're in this intraday section and we're taking a look at currency pairs, because the reason that the U.S. dollar index is up so much, certainly because of the movement inside of the primary basket of currencies, that being the U.S. dollar, Japanese yen, that still wants higher price. So that's not impacting things too significantly. It's kind of been flat out here as we speak. It will impact things because it will get weaker, the dollar will get stronger, so it still wants higher price out here. But it's really the euro that's 54%, 53% of the entire basket of the U.S. dollar index. However, the Great British Pound and the U.S. Japanese yen, they certainly impacted. If we take a look at the Great British Pound out here on its 30-minute chart, haven't looked at the daily, we'll go take a look at that. But you can see the old hammer candle, your favorite and mine, that took place out here at 8:30 in the morning as well. So that says on a 30-minute chart, on an intraday chart out here, you're hammering out a low. That low being 1.6393 out there. Look, if you see a close below that level and you're long, what I can tell you is you would be wrong out here. You never want to see the lows of a hammer candle get taken out, especially one like this. Now, that is a powerful hammer candle right there inside the inside the Great British Pound US dollar. And you got a nice little bullish engulfing candle. So we've got two bullish candles inside the Great British Pound US dollar out here. If I were trading on an intraday basis, on a 30-minute basis out here, I would make sure that I had a good stop in place out here, because you're getting signs of a potential reversal. Now, that reversal, it's in the oversold level, so it could just simply be working up that extreme oversold condition out there, but there are reversal signals nonetheless out there. Now, let's go back into the currency world out here. Let's go take a look at a couple of other tools that we've got. If we take a look at the weekly chart, let's take a look at the weekly chart here for the euro. Now I'm going to switch over to the futures contract out here. I know we've got viewers, listeners that trade that. And we take a look at retracement levels, the importance of that 0.786 level out here, which on the futures contract comes in right around the 1.3018 area. That's the black dashed line going across my screen. We can see we've hit that area. That has held. Only in the fourth move down in a Chapman wave count out here. So the weekly says, something to think about. We could be seeing a move lower over the next couple of weeks. Maybe going ahead and testing, making that 100% move and getting down to the July 12th lows out there. At that July 12th low, what you'd have is a little bit of synergy coming together as well. So on the longer-term time frame, it looks to me like that's what the euro wants to do, unless we see some type of significant reversal. Why? Because at that stage, you'd have 100% move, an area of swing points where you've got bulls hanging out in large fashion out here. We've got a nice bullish engulfing candle, the date of April the 5th. You've got a nice one out here from July the 12th. All of that right now being at the 61% retracement of the larger move from low to high. That larger move being the July 27th low to the high. That was put out here with that bearish engulfing candle on May the 9th. It was also a key reversal candle as well. So I would say that at this stage, longer term, it looks to me like what the euro wants to do is get all the way back into those July lows out there. But this is a weekly chart, so it'll take a little bit longer to unfold. We have to recognize and realize on a daily basis as we take a look at what's going on that you've got some bulls inside of the euro that are hanging out there on that 30-minute chart. So we'll continue to monitor that. One last thing, if we take a look at the futures contract on the daily basis out here, what the daily is saying is that, okay, you've now made your fourth trough move down right out here. We're putting together all of the tools that we've got. Of course, here in the futures contract, looks like you've got resistance right here at the TAS market profile level, right around 1.3174. So here's how at TFNN we can put together all the tools. So that should be resistance. So any bounce that intraday chart shows us, we ought to see some pretty significant resistance at about 131.7 out there. This is Steve Rhodes. This is TFNN 877-927-6648. Give me a call, folks. We'd love to hear from you. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up 18, S&P up 4.5, and let's stay in the currency market here. We're going to go in this way. We'll go from the paper currencies into the metal currencies as well. So let's go over, take a look at the U.S. dollar index out here, get a feel for where it's going, where it is likely to run into resistance out here. Now, this is a weekly chart that we're taking a look at on my screen out here, and we're looking for the messages of the bulls and the bears out here. Now, I'm going to draw a line across my screen out here. It's and this is taking us back into 2012, so July of 2012. That line right there, right about $84.25, is a very significant area of resistance. That doesn't mean that price can't move up higher or spike into that area here. You had a big key reversal session, the trading session of July 8th. This is the week of July 8th, 2013 out here. The U.S. dollar index is trading into that swing point. All right, so it's trading inside that swing point. The week is not over. If it continues to trade inside that swing point, I would say that the 84.25 to the high of that July 8th area, 84.96, would likely be its target out here. If I just take a look at A to B equals CD patterns out here, the most recent one, we'd be taking a look at the A point being the low of May 5th, 2014. Again, it's a weekly chart. The high is that June 2nd high, the B point, I should say, and the C point is the June 30th low. What we have done here inside the U.S. dollar index, right now on the weekly chart, you can see it's moved up into the 1 to 1.618 area with a wide-ranging bar. When you make your D point with a wide-ranging bar, that's not where you're going to stop. You're going to go up to the next level. Now, interestingly enough, and if you own the art of timing the trade, which you should own that, you would know. And on page 72, I'm just kidding about the page number out there. I'm not sure what page, but there is a page number out there. Maybe somebody can let me know what that page number is. That says that if you do a 1 to 2, A to B equals CD, because of the chart patterns that Tom had studied, that you are likely to do something else. Well, interestingly enough, on a weekly chart, 84.04 is your 1 to 2, A to B equals CD, and 84.24. And I just drawing these patterns out here. I didn't have any of this pre-planned or anything, folks. So it's just kind of, how does that work? Is there coincidence? Absolutely not. There's no coincidences in life out here. So that's significant resistance. What I would also tell you is when I took a look at the commitment of traders data last week, what I noticed was that the commercial traders, when you took a look at the currency pairs, you have to take a look at each of the individual currency pairs to figure out what they're doing, because the U.S. dollar index is a basket of currency pairs out there. What they were doing was they were beginning to build their net short positions inside the U.S. dollar. Pretty odd, huh? look, they take a while to build their positions out there, just like they had built their positions to be short in gold, and they've started coming off of the accelerator. Last week, I'm very interested to see what this week's charts, what this week's information shows us out here. In any event, so that's what's going on inside the U.S. dollar index on the weekly chart. If I just switch over to the daily out here, we're going to find another resistance area, potential resistance, and just normal charting. What's interesting, that 84.25 level still on my screen out here. There's another line of demarcation out here, and that's this little gap down from the inside the daily chart in the U.S. dollar index. That took place on July the 11th. So 83.64 to 84.25 should be a fairly decent resistance area for the U.S. dollar index. And then you can just a normal retracement of the last move up here would be very, should put some energy into the commodities out here. So speaking of the commodities, let's go take a look. You got gold is up $4 and silver's up 13 cents right now. So let's go take a look at Goldilocks and silver. Let's see what they're doing here. I don't think I'm going to have enough time during this segment to complete it, but let's go look at gold. Now this is going to let me do this out here. This has got delayed data, but it gives you the more accurate market profiles out here. So let me delete a few things off of my screen. Let me at least delete the A to B equals CD to the downside out here. So with regard to gold, we haven't really seen what we've seen here is gold has come back to its breakout area. Now, many times people will use the actual breakout candle. That's the wide-ranging bar from June 19th. My experience says to look at the bar or two prior to that, where price actually broke out from. And if it's a swing point, use that swing point as your real gauge to a market coming back into a breakout area. So many times people will get a bit concerned when price gets below the actual breakout bar, breakout volume. I say go take a look at each of your charts and go back a couple of bars or two, especially if you've got a swing point out there. And that's exactly what we have inside of Goldilocks on June 17th. So that low at 1258.80, in my opinion, is very, very important. Of course, getting back above the June 19th low out there, which is at 1277. That would be nice and bullish, and 1277 happens to be that market profile low. And we don't want to see that act as resistance if you are trying to become bullish on gold. If you're bearish, you do. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 22 points. Trade out at 17,100. S&P up 2 at 2,002. NASDAQ Composite up 7 points. Trade at 45.79. Russell 2,000 up 2. New York Stock Exchange up 8. Leading the charge to the upside out here, we've got PVH Corp. PVH is the ticker symbol, up a nice $10 and up a nice 9% out here. Looks like they posted revenues, net income of $126 million versus $5 million loss. They must have had some unusual expense item, because that's one heck of a whopping change in net income when the revenues were flat out here, 1.98 versus 1.96 billion from the prior quarter, their prior second quarter. Amazon moving higher this morning, up by $7. Amazon, as I recall, wants to go ahead and try to fill the gap. It was moving into the swing point here yesterday from August the 27th with volume. That August 27th swing point had 2.9 million shares. Yesterday was moving, well, only 1.9 million shares. So it had moved higher into it on September 2nd, but yesterday was a little bit of a downer. Now, it's right now trying to take out that high, which I had identified as a potential C point of an A to B equals C to the downside. Let's go ahead and erase that here. It's inside the gap. When they're inside the gap here where it really broke down, it becomes a bit unstable with regard to trying to identify the next area where one could take a short. Now, what's really cool out here, if we use our entire stable of tools here at TFNN, you can see the market profile. What it did yesterday gave us more of a bullish signal than a bearish signal. In fact, we've been seeing that here over the course of the last the last 3 trading sessions. What I mean by that is you broke above the resistance level, the market profile high out there. You did that on August 26th, but it wasn't until we came back. Whenever you break through a resistance area, trend line, channel line, and in this case here, a horizontal primary trading range boundary. I've got a very cool tool that I have been working on with some great folks, great programmers with inside of eSignal to automate the primary trading range boundary lines. I'll see if I can put it on the screen out here. Made some really nice progress yesterday. And those are just natural areas of horizontal support and resistance out here. But in the case of Amazon, if you can clear the August 27th high, which is 346.67, which it really the message here is that it wants to do that and should be able to do that out there. I got to come up with a great Jack Nicholson impression out there. You know, you want me on that fence, or I'll work on that. In any event, maybe I won't work on it because it just might not come out so good. In any event out here, if it can get above that high of 346.67, ought to at least go close the gap and get up into the 358.52 range out there. So that's the message inside of Amazon as I take a look at its daily chart pattern out here. We've got Bolt Technologies. It's not bolting to the door or anything. It's really moving to the upside, up 35%. So what is this here? Buyout of Bolt Technology. There you go. National Securities Law Firm seeks higher price. Name it. So that's a bolting to the upside. This is out of curiosity. I don't know what Bolt does out here, but see where price is trading back to. Just back into its 52-week high level is where that buyout looks like that is occurring. We also got Google to the upside, up $3. Carl Icahn Enterprises, I think IAC, isn't it Icahn? No, maybe it's not. IAC Interactive. I think I'm wrong on that one. That's trading to the upside. Costco up about 2%. Let's go check in on Costco, up $2 and change on its daily chart out here. Costco headed back towards its highs, its most recent highs back here, and 52-week highs, as a matter of fact, at 126.12. That's on the trading session of 126.12 of November 26, 2013. Only 1.5 million shares out there so far, up this morning with 547,000 shares. So Costco is going to get back to that swing point. Let's pull this over to the side here. Looks like a fairly decent consolidation pattern. Now, if it can break that out, that would be pretty large. Let me put this on the weekly chart. It probably stands out a little bit easier if we take a look at the weekly chart here for Costco. Pull this back now. So we can see a consolidation, very large consolidation. Now, it hasn't really tested the top of that for us to know whether or not this is a consolidating pattern. But if we do take a look along the bottom out here, you've got your consolidation in the 110 area, and that's going back to July of 2013. So we'll see if, in fact, so Costco may run into some significant resistance at that 126.12 area. So you got a nice little, 110, about 16-point potential consolidation move. Now, if Costco, on the other hand, is able to take out the high from November 25th, 2013, 126.12, do with more than 4.5 million shares, it'll set up a whopper of an A to B equals CD to the upside. A whopper. Yeah, a big whopper. I'm not even going to give you that price projection because Stevie's not even sure where I would grab my my B point. The most conservative A point for the move would take it down here into the November 12th lows, and that's at about the $93 range. So 93 to 126. That is a whopper of a move if Costco is able to take that out. COST is the ticker symbol there. To the downside, let's take a look at some things here that are moving to the downside out here. You got the Matrix SVC, Matrix Service, I would believe. Looks like they may be out with numbers, net income of $7.5 million versus $7.3, and revenues of $344 versus $235. So killing the top line, not so much to the bottom line out here. Let's go take a look at its daily chart. So this is coming back into a breakout area. It is below that breakout area. Let's go see what's going on the daily chart here because it is gapped down this morning. And it's gapping down with some pretty decent volume behind the move. For this equity, 556,000 shares to be exact. Now let's go see what the breakout area had here. Let's go ahead and remove a couple of lines from my chart just to make it a little bit clearer for us to take a look at and see what this equity is doing. So the actual breakout area inside this equity took place right here on this trading session of, February the 5th. Now, in this case here, let me go ahead and explode the chart up on my screen. What we can see, and we're just taking a look at the breakout area, you can see that candle itself where it broke out from. That is your level of the breakout. You're not going to go back a couple more candles and see any lower price out here. So it's really the low of that is the breakout. So let's go put that price point in here, the 24.34 area. And that had volume to the upside of 1.1 million shares. So you're now gapping down with more volume, as I recall. We're at 500,000 shares or so already. 600,000 shares. So it's broken right through that area. Never came back and really tested the breakout. So now we've got to go find out. This is now taking out a B point with volume. So if we take a look at this, this does not look good. This looks miserable out here if you were a holder of this equity. Got a little shooting star candle up at its highs on June the 17th. That's going to be your A point. Your B point is this swing from August the 5th. Not much of a retracement at all. That's dangerous. That's into yesterday's high out here on September the 3rd. third. Come on, click on that. There you go. Only about a 30% retracement. So the first target for this is 1650. 1301 is in play out here. Let me put this on a weekly chart, see what we've got down at that $13 level, if anything. So at the $13 level, you get all the way back to really where it broke out, or its last major swing point. So right around the 1252 to 1494, and I would have to say that is where this equity is very likely headed to. That is ticker symbol. That's the Matrix, MTRX. Actually, what's the name of the company? Matrix Services. There you go. GoPro off this morning here. GoPro down about $2 and change. Still not enough data to take a look at this on a daily time frame. Let's pull this back. Let's see here. Yeah, almost created an island reversal. Did it? Did it? I don't think so. The high from September 2nd, 55.35. The low here yesterday, 55.43. 35. Son of a gun. 55. It created an island reversal out here. Let me make sure. Right? You got 55 high, 55.35. Low, 55.43. Yeah, you got an island reversal candle formation inside of GoPro. Now that's as we speak right now. If this gets up to today intersession, it gets into 55.43. It will not have an island reversal, but right now it does. Jesus hasn't traded enough in order to be able to form an island reversal at its all-time highs. But that's the chart pattern out here. So key level of price inside of a GoPro is 55.43. Now, if the island reversal actually holds, then you're looking at probably a pullback into its original IPO dates. That would be the signal that I would take a look at, somewhere in the $40 range or so. You're trading at 54.67. It is moving up. It's trying to go rescue the passengers on that island. That is what GoPro is trying to do. It's got a camera strapped to its. No, you thought I was going to say something else. It's a camera strapped to its head. That's what it's got out there, to its candle. To the downside as well, you got lumber liquidators. Little liquidation going on this morning. Now 4%, down $2.40 out here. Let's go take a look at lumber. Like, oh man, how nasty is this? Huge gap down, 10 million shares on July the 10th. So this does not look good. This used to be a high flyer. This is the perfect reason why do not get too overzealous in your portfolio with IBD 50 stocks out here, because or let me just say this: if you do ride those things on the way up, the first sign of retreat, get the heck out of Dodge out here. That first sign of retreat actually took place inside of lumber liquidators back on September 27, 2013, when it gapped down with 4.2 million shares. And then it was no mercy on the trading session of November 22nd out there, as it moved down even further. And it'll probably be quite some time before lumber liquidators gets back up to see those highs out there. LL is the ticker symbol out here. All right, so we haven't talked about a lot of the markets actually go ahead and trade for a bit before we started taking a look at what was going on inside the futures, inside the indices out here. Inside my newsletter this morning, I said we'd see higher prices before lower prices. If you took a look at yesterday's market, my feeling is this, my belief is this, and that is that when we took a look at, let me just put up the chart out here. Let's put up a chart. Let me do this. Index PTRs. These are actually let me put up the chart here for the S&P 500. So let me do that. So we take a look at the S&P 500. This date right here, July 31st, if we take a look at this entire move up, all right? Take a look, not the entire move up, but if you take a look at this move up off of these lows back here in April of 2011, you don't have any wide range, just one day of damage to the downside. There was another day, if I take it back to the February lows out here, you only really see maybe 2 days of really significant price erosion, and they didn't seem to hold very much. Well, all the price erosion that really took place yesterday was a result of Apple. And it's waiting inside of the indices out there, inside of the NDX 100, and so. Just like this date right here, the July 31st date here, that damaged the weekly chart and damaged the monthly charts out there. And now that's been taken back. And so, it was kind of like, hey, not so fast with regard to the S&P 500. In fact, if you look inside the sectors, the top six, I believe it was the top five or top six sectors, said they want higher price before lower price out here. And that's from the weighting standpoint. So at least the S&P 500, is giving us the message that it wants higher price. And that's what we are seeing at the moment out here. And that's really my expectation. It's something that we may see over the course of the next couple of days. Now, if we take a look at trading ranges out here, that's what I've got. If you're watching us on Tiger TV, and I'm working with just an incredible group of programmers for eSignal out here that are helping to develop this tool, this primary trading range tool out here. So it's really a pleasure to work with these guys. And we're working on the cosmetic piece of it, so I could increase the line color and things of that sort. But what you're looking at on my screen out here, if you're watching us on Tiger TV, the green horizontal line going across my screen, which is priced out at about the 1977 mark, I can actually turn that on my screen if I want to. Let me do that, and I can give you now I'm going to give you the exact price, but when you're using these trading range boundary numbers out here, I'll go ahead and put the monthly, I'll put the weekly, and I'll put the daily labels on my screen out here, and I'll move them off to the side. This is a target area, so you don't have to use it to the exact tick out here. But if we take a look at and let me go ahead and I'll even increase the font on that. Just doing that off to the side out here, maybe make it a little bit easier. There we go. Close that. Did that work? It didn't seem to work so well. I must not have hit the right button. But if we take a look at this, the weekly, here's the green line, the green thin line going across my screen inside the S&P 500 is the weekly primary trading range boundary line. And that's priced at 1991. And we can see here what's interesting is if you take a look at the doji candle from July 24th out here, the doji high is at 1991.39. Now, actually, when the primary trading range boundary numbers were this is an automated calculation. So I've been able to work with these guys to automate this tool and automate that calculation out here. Now, that 1991 really wasn't a part of that factor. The real significant, I don't know if I can, the real significant weekly, because this is data now that goes all the way back in the S&P to 1997 or something like that. Anyways, I don't even see the real primary trading range where you have the largest number of co-located opens and closes way down below that level out here. When we get back, we'll take a look at this because this suggests we ought to see 2013 in the S&P 500. That happens to be a daily primary trading range boundary. That's the target for the S&P 500. 877-977-648. This is Steve Rhodes at TFNN. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame.
Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
You've heard Basil Chapman on the air as the host of the Tiger Technicians Hour, and now's your chance to spend a full day learning his trading methodology, the Chapman Wave. Basil has taught thousands of students his trading methods over the years, and on Friday, September 12th, he'll be hosting a one-day online Master Trader Series class. Included is a month of his daily newsletter, The Opening Call, a $128 value. Basil will cover a variety of topics and techniques that he uses when looking at key charting patterns that repeat consistently in the market and that you can add to your trading methodology. You have access to the full 8-hour archive for a period of 30 days, as well as availability to ask questions of Basil in the month following the course as you practice what he teaches in this full-day Master Trader class. For all the details, visit TFNN.com and sign up for Basil Chapman's Master Trader class on Friday, September 12th. Reserve your seat today.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's up 71. S&P is up 8. Now let's go back to the S&P index chart under the cash index that we were taking a look at. And let me switch this back to the daily time frame out here. I think I said the target is going to be the 2014, 2013 level out here. That is actually a monthly. That's a monthly primary trading range boundary number. So 2015 is what we will call it out here. That is where price is likely headed to. That's where it'll run into some significant resistance. Now, on this daily chart out here, let me pull this off to the side. Because we're using, in order to identify these primary trading range, horizontal levels of support and resistance out here, because we're utilizing what in essence is the body of the candle. We're not using the wick of the candle. We're trying to identify the largest number of co-located opens and closes. Now, because of the way that this tool has been developed, there's a little bit of slide room, a little bit of wiggle room out here. Not much, but so the lines, that's why these are to be used as what we'll call guidelines, but really good guidelines out here. And what we can see here, the red line is going across my screen here, the primary trading range boundary line out here, 1862 was the monthly. The daily was 1872. There's your 10-point difference because of using the body of the candle out there. And you can see that once price got above that 1862 level back here, finally in April of 2014, it made its way all the way up to the top of that range out there. Again, July 3rd. Well, it's making its way up to the top of that range as we speak right now. So this will be the first time up there, 2015. I expect that's going to be some significant resistance out there. there. If it breaks through that area, then you're looking at 2,035 as its price target. That's the next trading range boundary line on the daily chart. But I expect 2015 may be the area where we start to see a rest unfold out here, and that is inside the S&P 500, utilizing our horizontal levels of support and resistance, our primary trading range boundary lines. Now, I'm going to go back and take a look at a couple of divergent charts out here. I don't know if I can cover this all during this last segment here, but I'm going to take a look at, here's another thing to consider as we take a look at the S&P 500 out here. Now, the top portion of my chart, if you're watching this on Tiger TV, is the Guggenheim S&P 500 equal-weighted ETF. You see, the SPY is not an equal-weighted ETF out here, but there are ways to take a look at what's going on inside the equal-weighted structure. Why would one want to do that? Well, the reason that one would want to do that is because it helps us to identify levels where things start to get off kilter and where you can start to see significant retracements occur. The most recent one here, if you go back inside the equal-weighted ETF for the SPYs out here, you can see that the high that was made on July 3rd, that in the equal weighting side of it, it was making a lower high back here on July 24th before the market started to move higher. Not the case here inside of the SPY itself. And that divergence, it doesn't happen often, but it is one where you typically see significant reversals out here. Let me pull this back, see if I've got any others notated inside the SPY. Looks like I don't. I think they're all, I spent most of my time on the Qs yesterday, and I shared that chart with newsletter subscribers this morning, and it was one of the elements that helped assist in making the determination that this market wanted to at least see higher prices before it sees lower price out here. And if we take a look at the RSP, the Guggenheim S&P equal-weighted ETF right now, there's no divergence going on between the SPY and the equal-weighted structure that is out there. That's actually a sign that you've got all kinds of equities that are participating in the market. Something similar to what John Logan is working on with regard to his market profile system out there. Well, folks, it is a terrific Thursday. Thanks again so much for joining us. Stay tuned. The Money Masters show is up next. That means I'll be with you for another hour. If you're off to start your day, have a great Thursday. I look forward to seeing you bright and early tomorrow morning. Take care.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.